Welcome to Wise Beyond Bitcoin, where you come for blockchain education and opportunities. My name is Lucas.
My name is Ryan.
And we've got some major updates on the macro news. As you know, we like to keep you up to date. We're getting back into the swing of things this year with weekly updates and macro updates as far as the mainstream market, crypto markets, and the opportunities that are still going out there right now. So without further ado, don't forget to hit that like button if you like this kind of stuff, crypto opportunities, macro news, and how it all comes together. And let's give you your favorite stuff, which is economic news and
Yeah.
what's going
Well,
on.
there's been a bit, right? Since over the last week and a half or so, we've had a lot of data points coming through, and most of them have shown that the economy is still in an expansion phase, or is at least not contracting. And in some places shows that the inflation is resilient. It's not going to be that transitory phenomenon that we were hearing about maybe a year ago when this whole process started, but no, it's here to stay. And so we have an article here about the recent numbers we got for January, showing the month what happened in the CPI, what happened to inflation, and it's continuing to slow from its high in June of 9%, but it is not slowing as much as it did month to month in the previous months, right? So we're having a change. It was last month, December, there was a 6.4% rise year to year, and now that we're down slightly, we're still down from the high of 9.1, but we're up from December. We're at a 6.5 year over year, or year to year. So that's showing that there's a slight uptick, and it's being driven generally by housing. If you when we look at the numbers, that's the main thing. The acceleration was driven by shelter costs. That's the main thing, and which is interesting. That shows that the housing market is still strong, even with with the rate hikes that we've seen this far. So yeah, that's it's good. It's good for the economy in a macro health sense, GDP kind of sense, but it's not so good if you're the Fed and you're looking for signs that your rate hikes are pulling some of that demand out of the system, trying to pull inflation back to that 2% target. It says that, well, we have more work to do.
Also, if around your neighborhood in your family, I know that in the markets that I'm around, it's the common thought is that, well, things have already started slowing down as far as new development and production goes. So a lot of the effects from the rate hikes and the continued rate hikes we know are going to come. As you see right here in the prices, we haven't felt that yet. The retail consumption's been high. Certain home prices have been propped up for a while. So a lot of those recessionary effects that people have been waiting for, well, they still haven't come. And
Yeah,
that's part of, there's a lag. And that's part of, we took a little holiday break and we're back in the swing of things, but everything we talked about happening has been happening, which is why we kind of took a break. The good news about macro perspectives is that if you come with a kind of patient, mature, long-term outlook, then you kind of sit back and watch these things play out over quarters. And we're here to talk about, there will still be opportunities during these times, great opportunities, but this isn't, everything's changing next week or tomorrow. I mean, when we look at what the Fed is talking about, let's continue to go over the jobs reports and different numbers, but with everything, the future targets, there will be more tightening of,
yes,
a reduction
well,
of liquidity.
Numbers, the jobs numbers really make that point clear. So we had a really strong job growth in December. Or I'm sorry, that was January, my bad. So January, 517,000 jobs were created, so much greater than what was the estimate. It shows that the labor market hiring is continuing to happen at a really robust rate, and the labor markets are one of the things the Fed is focusing on. They know that they're not going to bring inflation back to target with a labor market that is kind of on a boom, honestly. And so that's another that data point with the jobs came out a few days prior to the CPI numbers. So we're just getting more and more data points that says that, hey, demand is still there. Job growth is happening, houses are still being purchased. And so you're generally seeing an inflationary impetus throughout the markets, and that's the general. That's the takeaway from this article. We can move on to the next if you want. It talks about sales, retail sales. This is some data that came out yesterday. We have 2 data points we're looking at. Well, more than that, but two broad categories: it's sales, retail sales, and then manufacturing. Both the retail sales came out really strong. I want to say 3% was the there you go, 3% increase in January and that's more than expected. So it shows that the consumer still out there buying, even with prices high, a little higher than we would like. There's still strong demand, and that's a function of the labor market, right? If you have hiring, you've got more people working, there's more people getting paid, so it goes to reason there's going to be more consumption.
And it's news like that that's more reason the Fed in the future will take a stronger position at maybe 50 basis points instead of 25.
Yeah.
The good news is, do I feel that we're at the bottom, so to speak, of the market? No, that doesn't make sense. It feels like, based upon what the Fed says it's going to do and how the market is still showing strength, and they like to get a little bit more of a reaction for these policies, it seems natural that we should wait for a little while longer for the market to kind of deflate and get back to what the new normal is going to be. That being said, slowing down to 25 basis points and seeing these changes in the velocity, right, in the rate of these rate hikes, I can see how that's been a positive ripple.
Yes.
And sign. And one thing that's good to know throughout these cycles, which is another reason why we're going to continue putting these together and how it's all correlated. Hey, there are some great projects that are still building out and that are still developing, and there are some amazing things happening in the market despite these recessionary times, and that's we'll kind of get to later on if you're interested in knowing some of these projects that are doing it. But
we're going to cover.
But it's good to know that even months into the rate hikes, you still see development and life and partnerships and collaborations with blockchains and institutions and nations. So a lot of exciting things are still happening. But
I was going to touch on that manufacturing number real fast. So yes, it rebounded 1% in January. But what's not in this story is that a Philly-based manufacturing index actually tanked. So there might so this is a nationwide index, but locally in Philadelphia specifically, there is a survey, and I didn't.
It's like 20-something%. Was it something?
Yeah, it was a large contraction. So that's
24% or something.
It's worrying. I guess definitely worrying if you're in the manufacturing industry in Philadelphia, but it's good because in a sense that it shows that, hey, there is some impact. This is one of the only sectors where you could say, oh, look, the Fed's having an effect on the economy. And just as an aside, it actually goes to show, it goes to reason that manufacturing would be the first sector to really show an effect or a response, because they deal with some of the most interest rate sensitive investments, right? They're involving large capital purchases, and they have to be depreciated, every year, every quarter. There's a lot of reinvestment in these capital purchases. There's a lot of inputs they have to purchase to make, so they're making intermediate and early stage goods. So these are the things that are so far back up the supply chain, essentially, from the consumer. They do require a lot more capital goods and raw materials and things to produce. So there's a lot of interest rate sensitivity, and in cycles, these tend to be the industries that expand at the beginning of the boom, because the lower interest rates and the credit accommodation, it goes there, and there's an expansion that happens there early. And they're also the early industry that shows problems and excess inventory, and have to see prices go down and the margins get squeezed. That happens in these early stage goods sectors when the economy starts to roll over in a recession. So to see this contraction happening in the manufacturing while retail sales are still strong, while housing is still strong. That all goes along with theory. It's not an anomaly. That is, it's just what you would expect, and historically it's in line with what we've seen. So kind of a canary in the coal mine, if you will.
Well, speaking of canary in the coal mine, in the coal mine of the Federal Reserve, the canary, Jerome Powell, has some more news. And what is that?
Yes, so he is saying that there will be a couple of years until the Fed ends its balance sheets sell-off, right? So the Fed inflated its balance sheet during the coronavirus, well, other crises as well, but really during the coronavirus crisis, that really that was a large growth in their balance sheet. So they're trying to unwind that, and they're going to sell those assets. That reduces the money supply. It's more difficult to do in periods of high interest rates. Obviously, that makes borrowing more difficult. So the money that would buy these assets is constrained. So yeah, it's going to take time. They're doing 100 billion per month. Some of this can be done through allowing bonds to mature and then just not rolling them over. Others are going to be sales. So it's a mixture. This, I believe, is important and is going to be kind of an unrecognized factor that should be more appreciated in terms of what the Fed's doing. We look at interest rate policy, but this is also an important, this open market committee operations is, this is how money comes into being. It's how it is destroyed. So it's something to consider. Now, the effect this has on liquidity, that's where you get into the interesting questions. So this is sucking up cash and out of the system. So it makes it to where if there is a liquidity crisis, businesses, financial institutions have less cash on hand to meet these obligations because of these assets have sucked that, these asset sales destroy money. So that calls into the question, well, what happens if there's a liquidity crisis? Does the Fed have to switch gears and maybe start pumping money back into the system? Like, how sustainable is this? And that's kind of why I think that he talks about it being an open-ended thing over the next few years. They don't want to rush this. They know it could be, it could be a destabilizing thing.
Something else that's interesting to note about this lack of liquidity, because it will have real effects in the available liquidity in the Main Street market, but we are starting to see the digital economy take shape through international banks and in different governments. So one of the benefits of blockchain and crypto over the last several years, especially when it comes to DeFi, and we have some DeFi projects to talk about, but people have had the ability and still do to take capital and to be able to access liquidity by locking up that capital, just as you would through these mainstream institutions that we're used to. So through code. So, it's interesting to see how big the blockchain markets in the future will play as a role to allow for some of that extra liquidity where it's needed for certain development, on tap or on demand. And you could see governments, you could see this being used as a new tool, just as buying up corporate debt was used as a tool.
Well, it's kind of like if the lender of last resort shifts from being the Fed itself to abracadabra or something similar, where you deposit some collateral and then borrow against it, that's definitely not abracadabra specifically, but just that model of of digital tokens, using them as collateral, getting liquid staking. You can do that you can take your stakes, you can access liquidity by using these as collateral. That is something that's now open to anybody that has a Web3 wallet, right? And before,
or even institutions. A lot of institutions. You look at Pantera Capital, BlackRock, and the move to support the growth of blockchain and these tools. I mean, you could see them who have some of the largest crypto balance sheets more than small individual retail, them being able to take collateral in the digital market and use that for whether it's USDC or DAI or MIM or whatever stable coin in the future is sanctioned or is understood to be backed and solid. But okay, so there's some macro news, and obviously if it's your first time listening to us, welcome. And if it's not, then you're not hearing anything new, but updates and kind of how where we're at in the cycle, which is good to know that things are kind of going according to plan. He says a couple of years on the balance sheet, which is something that we've been talking about for a long time since the Fed announced it, and it is something that is to look at, coupled with the rate hikes and the slowing down the rate hikes. So this could be one of those things that even when the rate hikes cease, we still find higher rates come about, and we still see liquidity constraints and problems in the market. So, but again, this is also exciting times when you look at the development, and we'll have plenty more content to share with blockchain specific, but there are some great partnerships and developments happening with blockchain cryptocurrency and offering financial tools, not just for retail, but now we're seeing really for institution. Yeah.
And that's a good segue, you know, crypto, institutional players in crypto, that's really relevant to what we're about to talk about now with crypto regulations, dealing with kind of in the wake of FTX. You know, we're seeing that Ponzi scheme. We can go in, we should talk about that too. But recently Paxos, you know, is coming under the fire, under the sights of the SEC for issuing unregistered securities connected to their staking program. So we have some stuff, some changes that are happening. I don't think it's all bad. There's been some, definitely crypto has definitely reacted to it. There's some headline, I guess a headline you might say is the United States is banning staking, right? Is that an accurate way to summarize this, or let's get into it.
Let's get into it. So we're here to break it down so that you understand the reality versus the hype. And a lot of the hype has been a very anti-crypto regulation, that Gensler is out, you know, to put a stop to staking through institutions. And recently it was the CEO of Coinbase, Brian Armstrong, decries rumors of possible US SEC ban on crypto staking. So not that it's happening, it hasn't been passed, there's no bill, but it's just talking about possible moves. Now, one thing to understand, and the reality is that when they say banning crypto staking regulation, that's not really being genuine, because the truth is, when it comes to staking on chain, whether it's in the IBC or Ethereum or other, staking is perfectly functional and fine, and is not itself being made illegal as being bad. What this is really talking about are services that for-profit companies such as Coinbase, services that Kraken, these are third-party intermediaries that are kind of serving the same function as mainstream financial models that most people are used to, which is not the your wallet, your keys, you stake and pick a delegator yourself. So the retail investors, not the blockchain participants that are building the infrastructure, but for retail investors that are using their services, that they're able to generate profits from in this new model. The SEC is saying, hey, you're taking money from retail investors and you're using it to generate profit, and you're offering them. So based upon you coming in, having being a publicly traded company with shares of stock, you being a registered, entity, a corporate entity that has to abide by all the other rules of the game that everyone else does, that until it's clarified what this fits into or what it is, maybe you have to pay a fee, call it a security, do something in order to have it not skirt by the system and generate profit. Yeah. So I think that if people were more honest and aware of what the conversation really is about, it doesn't seem so horrible and nefarious. Gary Gensler and the SEC at this point in time isn't making things illegal for United States citizens or Americans. We're really talking about a battle going on in the corporate world for financial services offered by some companies that are benefiting and profiting for their role and doing great jobs as far as offering a bridge and a service to introduce people. But it's still not the same thing. In fact, I think in many ways, it could promote education for people not being so reliant on third parties and taking more control of digital assets so that they can support the blockchain, because it's actually healthier for the blockchains if people pull their crypto assets out of one staking entity and they stake it themselves. It's actually healthier for the relevant or relative blockchains. So, you know,
it's also better financially, right? Because if you're not staking directly, but you're staking through a third party, then guess what? You're giving some of your reward to that third party. But beyond that, if there's any airdrops or any participation reward associated with your wallet, it's going to the third party, right? It goes to the FTXs and the Krakens. It's not going to you. So you're not even gaining, you're losing control, and you're not even gaining any actual anything. You're losing. It's a lose-lose situation, and taking all this risk, because now you got regulatory risks involved with it, and then there's counterparty risk like FTX, where they actually embezzled the deposits that they were entrusted with and commingled them with their own investment funds. So it's definitely this is talked about as a crypto scandal, crypto problem, but really these are problems that you see all over finance, right? Like even with specifically the FTX, right? Like this is not a crypto centric thing.
That's a good segue, because recently, and the FTX scandal isn't recent, but the news was just blown up and so hyped. Sitting back and watching how most people have taken it, there's a popular pop culture character that calls himself Mr. Wonderful, and his name is Kevin O'Leary, and he's been on television explaining how there needs to be regulation to prevent I think he was involved. He was directly involved, not in the fall, but he was a spokesperson. So he was connected to the company in that regard. We never have recommended FTX or Celsius or any third-party intermediaries, just because this is an education channel, and we're really about learning about Ethereum, Polygon, Bitcoin, IBC network, about the actual blockchains, and not as interested in the different companies that earn profit by offering blockchain or crypto services. There are many out there, and they can be great entryways or exit points for many people. But I think that what's been lost, I have not seen many people talk about, the FTX collapse was not a crypto regulation problem. So when you have Kevin O'Leary or some politician coming out and saying, because of the FTX collapse, we need to be more careful, have more regulators, the reality was, just like Enron or Bernie Madoff, or go down the list of other mainstream market debacles, this was a complete oversight of the current model, and nothing had to do with blockchain and crypto. In fact, all of the assets that people have in their FTX wallets right now, if you go to those blockchains, Ethereum, Algorand, Polygon, Bitcoin, Dash, Litecoin, whatever they have right there, they're still either coins running on a blockchain or the blockchain running itself. So the idea that Sam Bankman-Friedman, or that this company moving around retail investors' funds and spending it in ways they shouldn't have, and rehypothecating it, doing whatever they're doing, so that later on, when the markets go down and people want their money back, it's not there. This happens in mainstream markets all the time, and that's why there are laws to protect financial intermediaries from these types of bank runs if they happen often. But if there was a problem in how the funds were commingled or not accounted properly, and then that still has everything to do with the current financial regulatory system that's been in place for hundreds, but
Yeah.
for a long time. So to pretend like this is some type of lack of crypto regulation is just disingenuous. It's not true. And
Right, because really, if we are gonna even get close to helping solve this kind of an issue with FTX or anything like that, it wouldn't be something that you would need to do to crypto as a whole. It would be more like if you're a company that's being an intermediary between banks and retail investors, and any that you need to be subject to security laws or whatever the commodity whatever sector you're in, that you should be subject to those laws and regulations and oversight. And I think so, if there is any changes to be made to prevent this, ideally, of course it'll never be completely prevented, because even Bernie Madoff was under SEC jurisdiction and had been investigated and audited and everything. So there's no foolproof fix to this. But if we're going to try to patch the hole in terms of like these crypto banks, then I think regulating the crypto banks makes sense. Sure. And in that sense, it is a crypto problem, but only in the sense that it's related to a crypto to that trade, right? But it's not something that's a native crypto problem, because there are plenty of exchanges that are unregulated, that don't fit this model of a third party intermediary with custody. Thinking about things like Uniswap or Osmosis, where it's an unregulated exchange, but this kind of problem is not going to happen because there's no custody of anything. So it's really these custodians that should be regulated like any custodian, right? If you're
and that's the whole point.
Yeah.
If you're an intermediary, you're a registered company that's a custodian of other people's property. They're whether it's real estate, whether it's
Yes.
money in their account, then you have to be careful how you lend it out or lease it out or sell it out. Because if they come back and say that we're ready for our property again, and somebody else is living there, or somebody else is using that gold or that money, then you're going to have a problem. But that's the whole point, is that I feel there's a lot of still of ignorance around this subject, and too many people are coddling this FTX debacle as an actual. They're treating it. They're just accepting it as it being a cryptocurrency lack of regulation problem, when the reality is it had little to do. I mean, yes, they did tell people, give us your money and we'll buy cryptocurrency and hold it for you. So there is that. But as far as them spending the money and not doing shady things with it, or not having it for people, not actually having those assets there, that's not a cryptocurrency issue. That is how that company was run and how they reported what they had. And so in these kinds of corporate, white collar crimes or corporate issues have been happening in the system. And this is proof that it can still happen in the system. Kevin O'Leary was really just a part of a corporation that was set to maybe profit off of this new growing technology sector. But it turns out that he was behind, the company made some
Ponzi scheme.
But as far as those different crypto assets being concerned, they're still resilient, solid, fine, and continuing to function and build. So I think it's important for people, especially if you don't want to miss out on opportunities, don't look at FTX as being some cryptocurrency failure or problem with lack of regulation. Actually, if you look at Aave and what's going on in the decentralized finance code is law world, and you go look at Curve, or you go look at other decentralized exchanges, there's more interoperability, there's order books and more developments taking place. So we're actually finding the funny thing is FTX is why so many people choose to go directly into crypto and blockchain. That's the irony, is saying we need more regulation because of this crypto debacle. It's like, well,
it's one of the things that tried to solve was that it was the problem with counterparty risk, right? So you could you could control your own finances, and you've got to so not have to it's trustless, right? That was the whole idea. We could have consensus without trusting these intermediaries, these third parties. It's done through code, and so what we're seeing with FTX is a symptom of a system that was there already, and that crypto was invented in part to kind of get around. So for it to sneak back in the back door in a centralized company with, that's an intermediary that takes custody of these funds, that's no shock, because that's the exact same species of animal that was doing that same thing in the old system. So the fact that it came into the new and repeated its game, of course, why wouldn't it? But that's not native to the blockchain itself. That's just what happens when a company gets involved with taking custody of blockchain assets. These kind of things are possible, and that's custodial risk, right?
And it would, like you said earlier, proper regulation would be great in this space. I mean, if more lawmakers or people in the digital finance or finance world recognize that, wait a minute, the blockchain is something that if you're going to be offering a service to give people these proof of stake or access to this, then you need to be able to have 100% of that on chain, or be able to have that, because how a proof of stake network works. You lock up a portion, and by code you will get back 8%, 3%, 9%, whatever that proof of stake network is offering is going to go back to whoever's staking. So if you're offering a service on a large scale to retail investors to do this for them, you're making a guaranteed spread. You don't need to rehypothecate and loan it out. You literally can just charge a fee from that stake. It could be a standard, fee that you can charge for off of that stake, and there you go. But anyway, I'm sure they'll come up with some great solutions. One more thing on this article that I just saw. If you're asking me, will another meltdown to zero? Absolutely, it will happen and keep happening over and over again. I think that it's one of those tautological. I mean, it's true. And it's true, just like after Enron, just like before and after. It's true that you're going to have out there right now, there's a fraudulent company running right now that hasn't been found out. And it's true that there are blockchain, whether it's exchanges or projects, that are going to go to zero. I mean, that's the nature.
Well,
in fact,
but that's also true of stocks and securities in the traditional market too. There are some that will go to zero.
Right. And you can't regulate away risk, as far as nobody knows which companies or blockchain projects are going to build, something of value that is going to be used and grow in the future. I mean, some companies succeed, some companies don't, and same with blockchain. So that's a different subject. But as far as things going to zero, I would say, as of course, none of this we're talking about is financial advice, but if you do decide to get involved in participating and being a part of these networks that you think are exciting and a part of the future and help them grow, do expect that some of the choices you make, at least I've made, are going to go to zero. They can't all take off.
That's part of it.
That's part of it. But the ones that do go very, very, very high.
This will be a little brief story here, or news item. The SEC is making a proposal that will regulate the kind of custodians that investment advisors are allowed to keep their assets at. So if you're a registered investment advisor and you take customer client funds and then you invest them on their behalf with a custodial wallet or entity, right? Then they're going to limit who qualifies who meets the standard as a qualified custodian. And this would be an entity that's SEC regulated, that has all the licenses and follows the books basically. And so it's going to limit the kind of decisions and options that investment advisors have, and probably in a good way, because they have fiduciary responsibility to their clients to make sure they don't subject them to something that's very risky, and of course these custodians that aren't qualified, by definition, are more risky. So yeah, this is the kind of regulation that I think, depending on the details, of course, so I'm not endorsing it, but this is the sort of thing that I think it's targeted. It's sensible. This is the place where we could see some meaningful and positive regulation.
Absolutely. Just like you've got ratings, you need to have the blue chips and the higher risk digital assets. It would be great for there to be kind of a language that could be shared amongst the traditional financial intermediaries or those lenders, the people that are there to say, hey, you know what, you can take some of your 401k, you can take some of your IRA, and you can start adding this to the portfolio. Well, maybe, you want to think that Bitcoin and Ethereum are considered to be blue chips, and maybe Bored Apes Yacht Club token might be a little bit higher risk.
Right.
If you hold one of those NFTs, you probably might disagree. I can understand that, but the point is, the reality is that not all cryptos are the same, and that's a good segue into where we're going to go, because that's another reason we love to share about this through this channel. It's not just the macro market conditions and how they correlate and what's going on as this new technology emerges, but what are all the different markets in the economy that blockchain and cryptocurrency will affect? It's not all money. You're talking about the digitization of the economy when it comes to titles and IDs and other types of communication. So there are different markets within the world of blockchain and crypto, and understanding the different markets helps you take a diversified approach to which blockchain crypto projects you would like to participate in, if you would like to do that. Before we move on to that real quick, was there something we've kind of covered regulation? Was there anything in particular in this bill other than it?
Oh, nothing too much. Warren's got a bill that Elizabeth Warren has tried to get support for it and get it on, pull it up for a vote, and it's lacked support. She's bringing it up again. One of the big problems with it is that it would have free speech conflict, because it's treating software developers and as basically as financial entities, like what's the language? As a financial institution. Okay. So basically a web developer becomes a financial institution, and the way the law is set up is they'd have to get permission from a regulator before they could publish their code, right? So you couldn't just publish some code open source and just let it go. You'd pre-clear it essentially with the authorities, and that has obvious free speech, First Amendment implications. There's other issues with the bill, one of which is it only applies to Americans, but most of these networks are all of these, these blockchains are global, international, and just with the use of a VPN, you could, it'd be easy to get around whatever limits were just on Americans. So there's constitutional problems. There's issues with defining individual software developers as financial institutions, given the previous definitions in the law. So this is an interesting article. It kind of goes over why her idea needs some tweaking before it becomes viable.
And it's a good example of bad regulation ideas. So it's kind of the opposite of what we were just talking about. And what's great about, and it's good, the more you learn about blockchain and crypto and what's being said in these different areas of politics, then it'll help one understand what's good and what's bad. Not all regulation ideas are bad, and that doesn't mean that or all regulation per se is necessary is good. And in this case, well, I guess what we would be for is regulation that protects institutional investors or retail investors from these entities that provide services. great idea. And focused on that, I think, is the healthy, most rational, practical way for human beings, men and women, no matter where you work, to move forward with this new technology that is built, ironically, on whatever she's passing, on code is law, public blockchains, open source, anyone can be a part of it. That's what's funny, is this whole market ecosystem is built on transparency, not on making someone get permission to create a blockchain.
That's right.
But the good news is that creates a healthy avenue for retail investors or institutional investors to, in the safest way possible, to get involved and help this new economy grow. The problem when you have people institute these kinds of draconian laws on how to get involved, or who is a part of this new market ecosystem, when you start creating laws that turn miners or stakers or delegators or whatever, these railroad ties and these rails, these building blocks for the tracks, then you're preventing research and development for these blockchains. And I think you're going after the wrong sector and the wrong areas. So it'd be great to have regulation focus on healthy growth, and it'd be great for more people to continue being educated and growing in their understanding of how this new free speech language, open source, blockchain technology can be a great public good for all and a private good for companies that wish to build on these blockchains and are doing so, which is very exciting right now. And this is a good segue finally to maybe get into some
projects that we like.
Some projects. Okay, so this is what's going in the economy, what to expect. Does that mean that crypto is no? Look, crypto's just now getting started. You've got regulators, the SEC. Look at the silver lining. That's why you're here, to kind of look at the macro look. And the macro look is clearly these people expect blockchain and crypto to be around for quite some time. So regardless of the interest rate right now and the conditions of the economy, you can look at this new emerging sector to continue to grow. And when the bull market returns, there's a good chance that it will return with a vengeance in this crypto blockchain sector. So I was going to come here and talk about this one first. We're not going to go into detail of any of these projects. This is more just to give people an idea of a lot of the great projects that are out there. And I'm going to start here because I'm optimistic over the future of blockchain and crypto. No, actually, this just happened to be on the list that we were talking about before the video. But I am optimistic about the future of blockchain and crypto. And to give you a quick update on what is Optimism, the Optimism Collective. Well, another reason I'm here is because you might notice claim OP airdrop number 1. Even if one is too late, there's actually new, follow the instructions. There's more airdrops to come. Airdrops are one of those opportunities that come in blockchain and crypto for participating in networks and being a part of the experimentation. So when you don't have third parties and you take the time to educate yourself and help be a staker, miner, a participant in the different chains, then it's not, the time is often rewarded. And Optimism is a layer 2 network built on Ethereum, which most people have all heard Ethereum. If you're new to blockchain and crypto, I'm sure you've heard the word Ethereum. And that's kind of a big blue chip. And another reason why I started here, because I'm kind of wrapping up, this is built on the fact that Ethereum's not going around. It's not going away anytime soon. There are many layer 2s. There are even other layer 1s and DeFi projects. It's interoperability, as we've been talking about and will continue to talk about, is the future of blockchain and crypto. Think of it as roads for cars, and no one would just build one road to go from one end of the country to the other. We benefit from having feeder roads, different neighborhood streets, and different loops around the town. So the more roads, the more layer 1 blockchains, the better. And Optimism, these layer 2s, they're like HOV lanes or extra roads that help you move faster and cheaper. Of course, they can do so much more than speed. and they can add privacy, security.
Yep.
And that's the idea, is that we're years into development of blockchain and crypto. We're years into the development of smart contracts and NFTs, and where we're at now for thinking about what market to diversify and look at the growth of in the future. Look at layer twos, Optimism, Arbitrum, ZK, and there are many airdrop opportunities within these networks and others to come about. So layer two technology, and I would also say other layer one technology would be something. Oh, Polygon Matic is another very popular
Polygon.
layer two that you can't ignore. It's been around since the ICO days of 2017. Okay, so I had some others written down here. Oh, okay. I'm going to mention a few right now. If you're writing these things down, and just put it, wondering hot picks for 2023 moving forward. Projects that we never talked about in the past, just because they didn't have as much to do when it came to the exciting development with NFTs and interoperability and DeFi. However, looking at where we're at in the market in the future, let me see what it's under. Of course, XRP, Ripple. Okay, here we go. If this is the official. So Ripple has been around for a long time. You may have heard it in the news as far as being in a lawsuit for quite some time with the SEC on how it's to be determined. I feel at the end of the day, if you do your research, which do your own research, period, end of story. But when you look at the stories, the narratives, and the collaborations, Ripple seems to be making strong collaborations with financial institutions like Bank of America or other large international banks. So I would say that you want to find those projects. Blockchain and crypto is a technology that is going to be absorbed and used in our modern economy, in our modern markets. While there are aspects that are able to grow next to it and do its own thing, there are also aspects of the current markets we have that will become more efficient and just adapt and use this technology with it. So XRP, let me might as well just follow them. I don't know if this is actually, this could just be called
I don't know.
XRP official. I don't follow this. I wouldn't claim. Be careful on Twitter, anywhere, to make sure you're the right one. But Ripple, the crypto itself, is something to look into, I feel, in the future, because once this lawsuit resolves, first of all, if it's good news, well, that's going to be great news for all the people in the Ripple community. And I don't know that bad news is necessarily bad news, right? Like, if the bad news is you're declared this, then there might be a temporary drop in the price, but then they'll fill out the paperwork and say, okay, we declare ourselves as this, and now boom, we're back in the market. So look how long it's been around, and the collaborations. There's a strong chance that it will be something here in the next year or two. And along with that, I'm going to mention Stellar Lumens XLM network is another one that's known for its foundation being at work with central players in traditional finance, and also Casper network. Casper network is one that I believe is more popular in the East as far as being used in China, but it being a proof of stake blockchain that is very much what Ethereum is looking to become, and how the network operates. And having made collaborations, I think they were there. They were at the Davos. They were at Davos. Well, yeah, that too. But I mean that they're actually, as far as making partnerships with countries and being a network that you can actually build smart cities on. So this is a blockchain that is actually looking to develop some real world applications and score partnerships with financial institutions and other corporations, international. So, if you want to kind of look at what are these projects that are doing that, I would say Casper Network, Ripple, Stellar Lumens, Algorand. Now I'm going to get into, let me type in, Algorand is another layer one. Let's see. Now this one I'm pretty sure I can find. Okay. This one I'm pretty sure is the proper Twitter, and you can find algorand.com. So again, unleashing scalability, TradeFi, DeFi, global sustainability, because it's a proof of stake network. It's another layer one protocol. Remember, roads. Ethereum is a great highway that a lot of different highways can be connected to, that goes all the way from east to west or what have you. But there are other great highways that can be built that you connect all these highways together. Eventually they all
Yes.
connect together, so it doesn't matter. That's the map of the future. It's not, will Algorand be the network that everyone builds on? That'd be like saying, will this freeway be the highway that everyone drives on? It's like, no one's ever going to just drive on one highway. People will drive on different highways. You can connect them, and then eventually you can come up with applications, okay,
That run on both.
like a convenience store that
Yeah.
run on both, and they even connect to each other because they're interoperable.
Right.
So you can be at the convenience store built on the Algorand network and make an exchange or change, and it communicates to the same 7-Eleven or convenience store application that's on Ethereum.
Yeah.
Exactly. So the beauty of it is, in the future there will be many portals or gateways into the blockchain ecosystem, and they become kind of more secure, the networks, as they become interoperable with each other. So that's cool. So okay, I mentioned that. I was also going to mention Stellar Lumens, Casper, and Ripple and Algorand and Avalanche. Obviously Avalanche has some partnerships. Is a big one. And I was also going to mention Syscoin. Syscoin has been around for a long time. It's proof of work. It's I think one of the stronger, I would call it in many ways, kind of a blue chip, not on price action. Of course, nothing lately when it comes to crypto, but it's when it comes to security and being able to offer all that people are looking to build for smart contracts and decentralized applications, but with a level of increased security because of a proof of work, proof of stake hybrid, you get, there is, and that's going to be the future. There is a difference between networks when it comes to how some are centralized more than others. Maybe some, Solana had many times where it went down and it took some time for the network to get back up. So when it comes to the efficiency, the speed, scalability, or security of different networks, then that's going to be something that people, individuals, or institutions are going to want to look into when they're making a decision on what to operate, right? So
That's right.
Syscoin, there's a shout out, Hedera Hashgraph. Of course, we mentioned Optimism. Arbitrum is another layer two. I want to mention Cardano. It's been around for a while. It's kind of a blue chip in many ways. I say kind of. I mean, it's one of the original creators there. It is. And you look at the development it's gone through. You look at where it's at today versus a couple years ago. I definitely would say exciting future for Cardano in the market of blockchain and crypto. It definitely looks that way. And then Near Protocol. So there are some other blockchain crypto projects that we'll mention and go into. This isn't a list of every single one of them. These are just some that have popped out as looking to be exciting in the next year or two. They've been around. Some have been around for a while. Some have been around for just in the last year or so, but a lot of them have survived through the bear market recession that we're in up to this point in time. And a lot of them look to be, this is the exciting thing. During the bear markets, we get to see the projects that are still building, that are still making partnerships, and that are in the news. So these are the times that you want to see which projects that you might want to get behind. Now, I want to throw this over. Do you have some sites you want to show some stuff? Okay.
Yeah.
Because one of the ecosystems that we're going to continue to cover and that we've been covering for a long time is the IBC, right?
That's right. That's correct.
Yeah. And
your screen throwing it over to me.
Yeah, I'm gonna come over here and give me a second.
Well, while you're doing that, I'll start jaw-jacking, talking about what I'm interested in. So, like you said, the IBC has been one of our favorite spots in crypto. Okay, cool. Let me find that the one? Yeah, that looks like it. Okay. So yes, the IBC has been a kind of our recent, home in crypto. Of course, we're not exclusive. We're happy to look at all kinds of projects and all chains, but there's been a lot of exciting development in the IBC. It's a, if you're not familiar, it stands for what, Internet Blockchain Communication. So we're talking about a interoperable language. Well, it's a language, a programming language. Tendermint is what these are
You want
based
to
off
pull
of.
up the
And
map of zones while you
yeah,
talk
let's
about
pull up the
this
map of zones. And it
as well?
essentially is a network of blockchains, or it's a system of blockchains that can all communicate together, which means that instead of having to go through like an exchange or a third party or something like that to swap from one to the other, you can literally do it from within your wallet. You can, because there's links literally. So the first projects that I want to really bring up is Atom. It's the granddaddy, right? Atom is the hub. Cosmos, it's the main, it's the blue chip
Oh,
of the space, right? It's the oldest. It's been around. It's launching some new features, which I think makes it a big. It's going to have a big run, in my opinion, in the next few years. The main thing it's doing is it's adding interchain security, which means that if you were say you wanted to launch a blockchain, every one of these is a different blockchain. Say you wanted to have your own blockchain, you had an idea, you programmed it using this Tendermint language, and you brought it over and you launched it. You would not have to create your own consensus security system, right? You wouldn't have to launch validators and all that. You could literally just launch your blockchain on top of the consensus mechanism that's in Cosmos Atom, essentially leasing their validators and their code. And since it's such a large network, it's got a greater it's got more liquidity, and it's got so much computing power that it's going to be more secure than some fledgling upstart, right? So you can outsource your security, your consensus to Atom, and then run whatever apps or dApps or exchanges or whatever you want right on top of that. And the cool thing about that is if you're an Atom staker, now you're earning Atom rewards plus rewards of these other tokens, of these other blockchains. So this is what interchain security is coming in the near term to Atom. There's others, interchain accounts are coming, but I figure I'd just leave it at that. Let's keep it
while
simple.
you're here, before you leave, because
Yeah.
we've mentioned map of zones in the IBC. I know you're going to specialize in the IBC today.
Yep.
This is one of the future of blockchain and crypto is interoperability, and this has been the focus of this network from the beginning. And what you see here is exciting because you look at EVMOS and you tell people what you were talking to me about with Cardano. The reality is we're looking at the future. IBC isn't just interoperable within itself; it's becoming interoperable with Ethereum and EVM networks, and it's going to become interoperable with Cardano. So we're really, this is how early stage. Now, a lot of these blockchains, are they going to be around a year or 2 or 3 or 4 or 5 or 6 years from now? Maybe not. You can't say, but this is a unique feature for a blockchain to develop and be able to automatically communicate directly with other blockchains in that network. This is huge. So,
well, you already mentioned my next pick, but I'll go over it again. Mention it directly at EVMOS right here. That's another really awesome project in the IBC. It stands for EVM Cosmos, right? So it's a bridge. There's a really great reward. It's a reward token, so you can stake and earn significant rewards, which is, some people say it has a negative because the price tends to fall, as people stake and earn the rewards, they tend to cash out. But I see it as a positive because if you can dollar cost average out of a locked position and pull off an income off of it, daily or weekly, at whatever price it is, that you're removing some risk versus the kind of project where you have to lock it up and you're not getting that reward, not that inflationary staking reward. You have to unstake it, and so this way you can kind of mitigate your risk over time. And if you're go into it knowing that this is the way it works, these are the tokenomics, then you can kind of be clear-headed about it and diversify and use your EVMOS rewards to get into some other projects, right? So you don't have to actually use new money. You can let these rewards use them across the IBC to get a bag and something else. So
So this
EVMOS. Go ahead.
EVOS is good. I was just gonna say this
Yep.
is because we're talking about the IBC and you have your cursor over EVOS and you can see all the connections that it makes to other blockchains.
Yes.
One of the neat things about Atom Cosmos, which is the blue chip of this ecosystem that you mentioned, and other projects, whether it be Osmosis, another great project, has been one of the most solid in the ecosystem and continue to serve as a valuable part of the ecosystem. When you participate, when a new blockchain comes along, they often will reward those who are providing security to the ecosystem and are already a part of it in what's called airdrops. So if you're a member of these and you are supporting the networks, you're guaranteed. I don't know how valuable they'll be, when they'll come about, but you're guaranteed to earn airdrops. And we'll show a website a couple later on that will tell you exactly which airdrops are coming. But it is a fact that being a part, it would be like if you were, imagine, because this is blockchain connected to traditional finance. Imagine if you were invested in a company and that company did R&D for other projects that built out products and manufacturing or what have you. If every time a new project was successful, it would be like you got a portion of that new company that the investment.
That'd be great.
So it'd be like you being directly rewarded for everything else that is invested in or built in from that. And now that's very lazy with terms, because that's not what this is, nor are these blockchains investing in others, but it's kind of a reward mechanism for participating. So that's a very unique part of the IBC ecosystem.
So got EVMOS. Axelar is another that's fulfilling a similar kind of role as EVMOS, building bridges between the EVM world and the Cosmos world. That's I think worth looking at as well. But I wanted to focus on Kujira. This one it's also an interoperable blockchain. So we can bridge from Kujira to Ethereum. I believe it's more expansive than that too. I think Phantom and Avalanche are a part of it as well. Polygon. So it's really pretty cool. Axelar is the same thing. They do have a very large number of blockchains that you can bridge to. So that both those projects are cool. Kujira is not just a bridge though. They've got a bunch. They're building out a whole suite of DeFi primitives. So you're lending and borrowing. Of course, they have a really cool DEX. Kujira Blue, I believe, is the name of that. There's a lot of cool stuff they're building out. So that's one to look at. It's being forked recently, and Kanto was the fork, and that had a lot of buzz. But I think the consensus seems to be that Kujira has a lot of partnerships and development and a strong team, and that they won't just be a fly-by-night project. But I will preface this with saying that some of these are more unlike your blue chip list. I'm going more into the degen, risky side of things with some of my calls. So just take this with a grain of salt and do your own research. There's another project that needs to be mentioned on here that it started off on secret. It migrated to an L1, its own blockchain. It's called Jackal, Jackal DAO. They're doing private file hosting, file storage. I do believe that this is worth your attention. They have some cool partnerships they're building. We've talked about Jackal.
Well, and we'll talk about them again. I mean, that's a hidden gem. I mean, when you peel behind not just layer ones, layer twos, but when you look at applications that are being built that actually serve a valuable function for society, individuals, when it comes to taking blockchain security and then data storage, and then you couple that with privacy, and we'll talk about more cryptocurrency and the need and the role for privacy layers to make applications function. We've got some great.
Now, one more thing I wanted to touch on. There were a couple more on my list. I just wanted to touch on. These projects have not launched just yet. The token the ticker is going to be SWTH, and the protocol is Carbon. This is going to be a interoperable smart contract platform. They're also having perpetuals and derivatives. So we're seeing more and more financial products. Order books are coming to these exchanges. So, and there's a lot of buzz with Carbon. So I would take a look at that. I can show you on Twitter where you can learn more about them. You can follow this Twitter feed right here to get more about what Carbon is doing and with their Swift token. But this is definitely exciting. Another project that hasn't launched yet, and it's actually into a class of its own, is called Celestia. The token is TIA, TIA. They're one of the first modular blockchains that's going to be launching on IBC. What modularity means is that the blockchain outsources at least one of these following components to an external chain. So you're dividing up the execution, settlement, consensus, and data availability functions and separating them onto separate chains, which can create, you can solve scalability and speed problems. There's all kinds of things that are made possible with a modular blockchain. So this is one to look at for sure. Beyond that, another project that's launching on IBC is called Dymension. This is going to be huge, in my mind. I'm not financial advice, but this is the first L2 on the IBC. They just had, they're going to be doing roll-ups. I'm sure privacy will be a part of this. They just launched they just had a huge fundraising event and raised over like $6 million in investment. So just a lot of cool stuff. I would take a look at this, do your own research, but Dymension, a layer 2, I'm confident this will be interesting. If not the one, it'll resemble, something will come out of this. I would imagine. The other that I need to mention, this is back to Map of Zones, Akash. They've done pretty well in this during the last few months, during the sideways bear market. There's been some good price action with Akash, a lot of hype, and not in a bad way. Akash is a file storage cloud computing network, so you can own your own cloud essentially and lease it out and or use it or however you feel. But it's and the security is enhanced by doing this on the blockchain. So Akash, AKT is the ticker on that one. And really, I have only 2 more projects to list, so bear with me.
You're good, brother.
This is Shade Protocol. We've talked about Shade a bunch. One of our favorites, really, on the Secret Network. There's going to be a Shade DEX that they're launching. They've made Shade bonds. They're now live. Not too long ago. Shade staking is coming up. But the really fun thing here is that, in my mind, is their Silk stablecoin. It's it's not launched yet. It's in the works, but it is a privacy-based stablecoin. And unlike others that are indexed to the dollar or to one national currency, this is going to be indexed to a basket of assets, including national currencies, but also including commodities. So you're going to get a little more accurate picture of what's actually happening with inflation and with the value of money. And so this is going to be designed to algorithmically stabilize in a way that protects your stablecoin value, even as those national currencies maybe lose value over time. So it's a kind of a way to compensate for the loss of value, because how stable is a currency that's pegged to a fiat currency, right? It's kind of almost like it's almost like a contradiction, right? So this is a way to get around that with a basket, an indexing to a basket of currencies and other assets.
And another thing that's really neat about it, it prevents a depegging event. I mean, in the sense that it's not trying to peg or mimic a dollar or the currency of any other nation. It's kind of it's floating based upon different national currencies, all of it. So it's really
you're reducing your risk, spreading it out.
It's a very interesting approach to the idea of stablecoins using blockchain technology. From an economics perspective, I really love that they are creating this new way. We're not going to try to mimic to copy a Federal Reserve note and offer you USD tether dollars or USDC dollars
Right.
or dollars. We're actually going, because who knows what the inflation is going to be like for the US dollar and how stable that's going to be compared to
Exactly.
and also who knows what trouble you can get into from different nations if you're out there
Regulations.
issuing tokens without their permission that's mimicking or imitating or the value of what they issue. So to have something that's not doing that but still is part of this macro currency when it comes to commodities and fiat together, I think it's a great approach. And then you look at built on privacy, which is a necessary feature
Yes.
of any kind of money and for many applications. I mean it's just a great project for
Yeah,
the
it's a
future.
great project. And Carter over at Shade, shout out to Carter. He's a lot of fun listening to him, talking to him. Smart guy. So definitely a fun project to be involved in. This is my final pick, I guess you would say. So GnoLand is the project. This is their Twitter. It's an interoperable concurrent smart contract L1 that's based. It's going to be utilizing a new language called GoLang. It's it's going to scale. There's a lot of cool things. They're very ambitious. The token I believe is GNOT right there. What are they trying to do? Oh yeah, I got to mention that Jaquan is a part of is associated with these guys. So just heads up on that. But the idea here is they're trying to. There's going to be a DAO. They actually talk about like sovereignty, individual sovereignty, and public goods, and kind of cracking that code of how to make transparency and democracy and individual sovereignty, how all these things can kind of come together. It's big dreams, big vision here. So we'll see what comes of it. But there's been a lot of development, a lot of hype, a lot of interest, I guess you would say. And I this is the last one for a reason. I'm not claiming to have done any deep dive on this, but if I was looking at what are the new up and coming projects that you want to take a look at, this is one just on what promises they're kind of making, and I guess the team behind it. I mean, these are people
Yeah.
who've built stuff before.
Are they gonna is this gonna be is there gonna be gaming, NFT,
Yeah.
and like
Yes.
markets inside? Okay, yeah, that's
Yes. All the
very
above.
neat.
It is.
So I think so. We covered macro updates, what's going on with that, and of course, crypto regulation, the myth, and the hype, and the reality, and we've covered a lot of the projects that are still developing.
Yep.
The good news is if you take that long macro look, you don't have to worry about what's going on in the short run. You can kind of close the book, get back to your life, and check on it every once in a while and chuckle, knowing that these things, they ebb and flow, and they're going to go up and down. But you don't have to worry, is blockchain and crypto a technology that's going to be around in a month or in a year? Because barring some black swan event, you look at BlackRock, you look at Bank of International Settlements, you look at the Federal Reserve, you look at smaller companies and corporations. The reality is that the largest, most powerful institutions are building on blockchain and looking to move towards blockchain. So there is a good chance that if you do your research and you get educated up on how to become involved and participate, there are many opportunities, many more opportunities. We are just wanted to kind of spitfire a whole bunch of projects to give you something to look at instead of keep you hanging on the loop for something else. Give you plenty of stuff to read the white papers, check out the teams, and see what's being developed, and let us know what you think below. Let us know what projects you think are hot, and of course we'll let you know. Hopefully in the next week, we'll brings together some weekly shows again for you, and not just the macro look, but what's going on in the regulatory sphere of crypto, but also in the real development side of crypto.
That's right. And we have a website that you can check out if you would like some one-on-one time. We offer consulting on blockchain, how to secure your tokens, how to take custody and not have to trust third parties and how to acquire and how to do bridging and swapping and staking. We can help you on any of this. So drop a line if that's something you were interested in.
Yeah, in fact, let me just roll to it. So if you enjoy this content, don't forget, hit the like and the subscribe. That helps out a lot for the algorithms, and so that you can get the latest update when we talk about what's going on in the economy and how you can benefit from the opportunities in crypto. Also, like Ryan said, if you want one-on-one coaching, we'll also do group tutorial sessions. If you've got a group of people that you want to catch up to speed, fill it out, wisebeyondbitcoin.com. The link is below in the description. When we go over acquisition, acquiring crypto, gateways in and out, storage, the different risks and the best way to store your crypto, NFTs, DeFi, or getting involved directly in proof of stake networks and picking validators and operating Web 3.0 wallets. So if you're interested in learning more and you want to get right, cut right to the point and have some direct help, we can offer that for you. Until the next time, I guess we pretty much covered it. Is that it?
Yeah, that's it.
All right. Well, then, thank you. Namaste, and have a beautiful day.